Hey guys, this is Mark Shawson, the Pattern Trader, and I just wanted to give a huge shout out to Michelle. Michelle put this review on our website. Michelle says, I'm a novice trader. I signed up to the Elite Pattern Trader program before I ever made a trade in the market. But my journey following Mark started a year ago when I decided to make a career change. I followed his blogs and would sign up to his free master pattern video reviews. Despite not ever trading, I gathered a ton of information and learned so much about his methodology. I could see the logic and the profitable means that came from his recommendations. I've been in Mark's program for a little over a month and have gained a far better comprehension of trading, the markets, environments, price action patterns that I now have confidence in. If you want someone who lives what he preaches and finds joy in sharing it with others, then Mark is your mentor. So Michelle, thanks a ton, and I'm glad you got the joy and the gratitude I have from sharing the knowledge that I've built up over many years trading for others and trading for myself in brokerages and other places. So Michelle, thanks for that shout out. So I guess what I wanted to talk to you today is I think the biggest challenge for traders is to know what are the real moves and separate them from the not real moves, the fake out moves, the head fakes. And so how do you handle something like this? How do you separate the real from the not real, or the fake outs, or the head fakes? Now, some of these head fakes can be very meaningful, and sometimes I go on these rides because you can extract a lot out of what I call a non-trending move. And I will take those, but you need to kind of separate them out because they end very quickly, and when they end, it goes back in the direction of the trend, and if you're not quick on the trigger, you'll get caught in this. And in a moment, I'm going to go to the charts, show you exactly what I mean, especially with respect to the US dollar versus the Japanese yen. You guys have heard me talk about this pair ad nauseum, but I think the recent moves really kind of prove out what I've been talking about. If you understand the big picture, what's going on a global view, then you'll see the recent move, which went up 200 pips, to just be that. It was just a head fake. It was counter trend trade. And we have to realize for what it is. And to me, I look at those as opportunities. So when they give me these head fakes, I just put on a position. In the case of the dollar yen, I just started piling in short dollar yen when it rallied. So you have to you can actually see these head fakes as opportunities to put positions on, frankly, at more opportune places. So with that said, what I'm going to do is go to the live charts, show you what I'm talking about, and kind of give you a feeling of how to separate the head fakes from the real trades, the trades that are going in the direction of the primary trend. Okay, in this little presentation, I'm going to show you how you can get really jammed up following these short-term head fakes. And what I'm looking at right now is an hour chart. So this is probably even a bigger time frame than most traders are following. Most traders are looking at 5, 15-minute charts with some crossover. In this chart, I'm looking at an hour chart, and you can see what looks like a magnificent rally in the US dollar versus the Japanese yen, where it started out from a price level of 107. Now it's looking good. It's looking good. You're missing. You're chasing it. You're chasing. And then guess what? It crashes. And again, I'm going to show you on the long-term charts why it's just really not possible for the dollar yen to go higher. So that when you see these little fake outs, you can understand them for what they are. So in this chart, I'm looking at the US dollar versus the Japanese yen, this time on a daily chart time frame where each one of these bars represents one 24-hour session. And you can see on the daily bar that looks like we had a huge rally, magnificent rally in the dollar yen. We went from 106 all the way to 109.5. Now you think this thing's getting going, you want to chase it, and look what happens. It's all the way back to 107 in a heartbeat. But if you understand the mega trends, the primary trends, you can separate what looks like these huge trending moves, something that is taken off, you want to get a hold of, you get long, and then all of a sudden it's in your face. And I can imagine, as we all have, you've had many of these trades where it looks like something, and then all of a sudden you don't understand why it's collapsed and gone the other way. But I'm going to show you on the long-term charts why it's really just not possible for the dollar yen to go higher, and why you have to short all of these rallies and understand that any of these rallies are just rallies in a huge bear market. Now, in trading, the markets are dynamic, fluid, unpredictable, and ultimately unknowable. So I hesitate when I say certain things, but to my mind, with my experience, with the way I look at price charts, there's virtually no way the US dollar can go higher from where it is. In fact, based on what I'm seeing, we're about to make another leg lower. And why I'm saying that is that ultimately, when you look at charts, you have to evaluate the long term. And this is a 45-year chart, and you can see that the dollar yen has plummeted from a price of 350 yen to the dollar to almost 100 yen to the dollar over the course of the last 30, 40 years. So we've been in a long-term primary downtrend. Now, trends do end, and when they end, they always put on a shape that signifies a reversal, something like this double bottom, which was responsible for setting prices higher. But you can see that we've had many of these kind of rallies, but they are only rallies in a long-term bear market. So to my mind, even if you look at that double bottom and this double bottom, this is not a shape in my mind that is going to suggest a turnaround and a sustainable rally in dollar yen. And the reason I'm saying that is that you can see over the last several years, we've had this sloping downtrend line within this kind of mega sideways market. So we've kind of gone sideways, but if you kind of take this out, you'll see that we've just had a situation where you have higher lows consistently over the course of the last 30 years. So despite the fact that we have these magnificent rallies, the rallies are unsustainable. They flame out, and they are just rallies in a long-term bear market. And so again, if you look at the primary trend, the long-term downtrend for dollar yen, the next leg is going to be lower. And so when we look at dollar yen in the more recent time frame, and I'll show you this on the weekly in just a moment, we see this descending triangle. Now, descending triangles can be continuations to the upside or reversals. Now, in this case, this is the continuation. The main trend is down, and once it breaks this, it will likely continue lower. So I do think that you'll break this descending triangle with the lows around 102 and head much lower over the course of time. Now, when I look at the US dollar versus the Japanese yen on a weekly chart, this chart has every bear price pattern that you can find imaginable in any technical chart website or textbook. Starting off with the classic double top in this time frame at 126 in 2015, coupled with the head and shoulders. A head and shoulders is exactly what it sounds. You have the left shoulder, the peak is the head. This represents the right shoulder. And so you have both the double top and the head and shoulders with the break of the neckline effectively confirming a long-term downtrend in dollar yen. And since peaking at 126 in 2015, we're now at 107. So we've had this stealth bear market, and I think we are on our way to lower prices in dollar yen. Now, in more recent time frame, you see the descending triangle that you saw on that long-term 45-year chart with the sloping downtrend line characterized by these lower highs. So every time it bounces, it's kind of a lower high. So you can anticipate every time it bounces that it's a fake out, and this is kind of what I expect you'll see going forward in dollar yen, where every bounce is just what I call a dead cat bounce. No insult to pet owners,
but it's just a bounce that is never going to sustain itself. And I think in this time frame, you can see again that we had another rally to 110 and a huge capitulation and failure. So we had this rally from 106 to 110, and in 2 seconds later, it's back to 107. So I do think that we're going to head back to these ultimate lows around 104, then 102, and the next stop will be 75 on this thing. So I think ultimately you could probably make 30 grand for every $1,000 you put up on dollar yen. So this is how you don't get hoodwinked by the fake out moves. If you understand the global perspective, if you understand the long-term charts, you understand what's going on, you can separate the real from the not so real.
So I hope you got a ton of value out of this little video. And with that, I wish you a healthy and prosperous trading week.